Hello and welcome to chapter 2 in management accounting. In this chapter, we are going to take a look at cost, and this is the outline for our video. We are going to look at the definition of cost, the methods of classifying cost, elements of cost, fixed and variable cost, and to end our video, we will learn about the high-low method of cost, right? It's a technique used to determine the cost of an item. So let's begin. Definitions and terms to know, right? So to talk about costing, let's just first talk about what cost is. Now, the word cost itself can be used in two senses. It can be used as a noun and it can also be used as a verb. Now, when we refer to cost as a noun, it's simply the cost of an item, right? Let's say the cost of this shirt was 20 Ghana cedis. Maybe the cost of the mic was 100 cedis, right? So that's costing as a noun, right? That's cost as a noun. As a verb, cost refers to undertaking tasks to identify the cost of an item, right? So let's say we were to sit down and find out the cost of this item, right? That would be an action process, right? So that would be using the word cost in the sense of a verb, right? But that's just English. Now, other terms that you would need to know include cost unit, right? When you talk about cost unit is simply referring to a unit of a product or service used to calculate cost. Now, say you have a brick laying business, right? A business where you lay bricks. Your cost unit could be 1,000 bricks, right? That's how you calculate the cost of the bricks that you are making, right? So let's say every 1,000 bricks produced will be sold at 10,000 Ghana cedis. That means that what? If you produce 5,000 bricks, it's going to be 5,000 times 10 Ghana cedis times 10,000 Ghana cedis. That's how you would determine the cost of the bricks that you had sold, right? So that's why we say that the cost unit refers to a unit of a product or service used to calculate cost. Another relevant term that is needed to know as a student studying management accounting would be the cost center, right? Now, the cost center is a function or department within an organization for which costs are accumulated, right? I take that again. The cost center is a function or department within an organization for which costs are accumulated, right? So let's say you have the typical organizations. Every organization, as we know, are divided into various departments performing different functions, all to achieve the same organizational goal, right? Now, this department may directly or indirectly contribute to the revenue that the company is going to make. However, they are all incurring expenses, right? They are all incurring costs. So as we go down the line, you will discover why it's important to know and understand this term, cost center, right? So we have cost units and cost centers, right? How are they related? Cost units are used to measure the cost incurred by cost centers, right? So let's use the same example, the analogy we used earlier about the brick making factory. If this same brick making factory had an operations department, right? Let's say one of the materials they will use would be cement, right? So how would you calculate the cost of cement? That's where cost units will come in. Maybe per 1,000 bricks, let's say 500 bags of cement are used, right? That's just an example. So the cost units are used to measure the cost incurred by the cost centers. Another link between them is that cost units and cost centers are types of cost objects. So what is a cost object, or what are cost objects? Now, the cost object is a term used to describe an item to which costs are assigned, right? So basically any item inside the organization or inside your life that you can assign a cost to is a cost object. And cost unit and cost centers are types of cost objects, right? So let's move on to the next part of our tutorials, which would be the method of classifying cost. Yeah, so let's move on and talk about the methods of classifying cost. The methods of classifying cost are three, right? There are three ways of classifying cost. We have nature, behavior, and purpose. We'll treat the behavior, cost behavior, as a way of classifying cost later on in this video. But for now, we'll look at the nature and the purpose. This is because they are related. Now for nature, cost can be classified into three. Now you have material cost, labor cost, and expenses. For material cost, that talks about the cost incurred for obtaining and receiving materials for and in the organization, right? So in the organization, any cost incurred while obtaining items or materials for the organization and in the organization, right? In the organization is talking about carried inwards, right? That's when the organization buys materials and pays for transportation to have the materials brought into the organization. There is also labor cost, and this cost comes in the form of wages and salaries and employment related costs. Then you have expenses, right? Now expenses are the external costs such as rent, business rates, electricity, gas, etc. Right? Now, aside classifying costs according to their nature, you can also classify them according to their purpose. With that, there's two, right? There are two ways. There you have the direct cost and the indirect cost or the overhead cost. Now the direct costs are costs that are directly accountable to a cost object, right? Remember that earlier in our video we talked about cost objects, and we said that a cost object is any object to which a cost can be assigned, right? So cost units and cost centers were types of cost objects. Right. So let's say I work in a marker factory. We produce markers like these. Direct cost will be all the costs accountable to this marker. Right. So you have the cover, this, the hard covering, right, and then the ink itself, right? Those costs would be direct cost, right? Now let's look at indirect cost or overhead cost. Now that speaks to costs which are needed for the general operation of business but are not directly accountable to a cost object, right? Now let's say inside our factory where we produce this marker, we have to pay the cleaners to sweep the factory every day. Sweeping cannot be accounted for in the production of this marker, right? But it's one of the costs incurred for general, operation of the business. So remember I said that the nature and the purpose are related. And for us to understand how they are related, it is imperative for us to look at the elements of cost, right? What goes into cost? When I say elements of cost, remember what does cost contain, right? What are the components of cost? So total cost, let's say total cost of this marker would be the sum of the direct cost incurred while producing this marker plus in the production overhead and the non-production overhead. Now these are collectively referred to as overhead costs. Remember, overhead costs are also referred to as what? Indirect costs. I've broken this down simply because ahead in the chapters to come, we will look at overhead costs and how to ascertain them, their apportionment and reapportionment. When we get there, we'll talk about that. But overhead costs can be split into two. That's the direct overhead cost and indirect overhead cost. Right, so let me talk about that for a second. Realize that in the nature, I said our total cost is equal to direct cost, which is also called prime cost, plus what? Overhead or indirect cost. And overhead or indirect cost is made up of production overhead and the non-production overhead. When I talk about the direct cost or the prime cost, it's made up of, direct material cost. So direct material cost, direct labor cost, then you have direct expenses, right? And when you talk about the overhead or indirect cost, it's the same way, right? So this is how they are related. So now materials, labor, and expenses can be classified as direct and indirect, right? So they can either be direct or indirect, meaning that if it's direct, they are directly contributing to the production of the item. And if they are indirect, it means that even though they cannot be accountable or accounted for in the production of said item, the marker, they are necessary for us. Those are the necessary costs that need to be incurred in order for this marker to be produced. Now, you read out we have direct expenses and indirect expenses. The direct expenses is the production overhead. Then there's the non-production overhead, right? Now let's say you have this marker and our factory. Now inside our factory we have production. So you have the production, the maintenance, storage, whatever. But any other department included inside the factory, right? We have the production cost centers. So we refer to them as cost centers, right? Production, we discussed that earlier, the production, the maintenance, and any other, they are all referred to as cost centers. But we have production cost centers and service cost centers. Again, we'll speak more to that as we progress, right? But there's production cost centers and service cost centers. The service cost centers are usually the centers that do not really contribute to the production of the product or service, but they play a crucial role in the company or in the factory or in the organization achieving their goals. So I'm going to talk about all this. Now we move on to talk about cost behavior. So let's continue with cost behavior. Right. What is cost behavior? When we talk about cost behavior, we are referring to the way in which costs are affected by changes in the level of activity or production. Right. Now, this is very important for managers to understand because it helps in forecasting the expenses the company or the organization will be making in the future, right? And for managers or for management accountants to be able to forecast such costs, they must first understand how the costs behave, right? So there are three main types. There's a fixed cost, there's a variable cost, and there's a semi-variable cost. We'll start with the fixed cost behavior. Now, when you say fixed cost, there are recurring costs that remain the same regardless of the level of production, right? Or regardless the level of goods or services produced. An example of that would be rent, insurance, and executive salaries, right? Let's say you have an office building and you pay a monthly rent of 20,000, 2,000 Ghana cedis. But that price is going to be fixed until the terms of your rent agreement expired, but for a period of time, every month you'll be paying that 2,000 Ghana cedis, right? So whatever output you manage to produce within the space of 1 month, it's not going to affect the rent that I want to pay, right? The rent will be fixed. That's what fixed cost talk about. Exactly. Now, due to the fact that fixed costs don't change in relation to the level of output, it means that the fixed cost per unit reduces as the level of output increases. So to explain all of what I just said, write diagram. First, the total fixed cost, right? You realize that it doesn't change, right? Even if output is increasing. This is, let's say, 1, 2, 3, 4, 5. The total cost remains the same. There's some move. It's a constant. And it's a straight line, right? Output is increasing, but total cost remains constant. You see, but we said that since output is increasing, due to the fact that total cost does not change, it means that the fact that total fixed cost does not change, it means that the fixed cost per unit will keep decreasing as the output is increasing, right? Because now the total, let's say you are producing 300 units in that office space where you are paying a 2,000 rent. It means that the fixed cost per unit would be your output divided by your fixed cost, right? If you keep increasing the output and you are still paying the same rent, it means that the unit will be sharing the output, so to speak, right? And imagine 10 people sharing 100 things, right? Everybody gets 10. Now imagine those 10 people become 20, right? And then they become 30, 40, 50, 60, 70, right? It's important to know that this curve will never touch the x-axis. This is because it can never be zero, right? If 10 people are sharing 5 things, no one will get zero. Everybody will get something, right? So this curve is constant. It continues nearing zero, but it will never get there, right? Now we said that fixed costs were constant, but there is a scenario or there's a situation in which fixed costs may change. Yes, I'm talking about the step fixed cost right here. Now this is a type of cost that is fixed only within certain levels of production. What am I talking about? Let's take this scenario, for example, number of employees and supervisors. Now let's imagine that in that office space where you are paying your 2,000 rent. Let's say you had about 20 employees working there, and each of the 20 employees were divided into groups of 10, and then you had 2 supervisors, right? As long as the number of employees remain the same, your costs for supervisors will also be the same. But if you were to increase the number of employees you have significantly, let's say from the 20 employees and you went to, let's say, 60 employees, then obviously your whatever you are paying your supervisors is going to increase, right? So this, whenever the step fixed cost, it is only constant at certain levels of activity or certain levels of production, right? Whereas that, right, if it's at this point it's constant, then it rises again, but it then maintains another constant level until it rises and then maintains that level, right? This is because the level of activity or the level of production keeps increasing, right? This is all for fixed cost. Look at the variable cost and semi-variable cost next. Yeah, so the variable cost. Now, variable cost, they change in direct proportion to the volume of goods and services that a business produces. What do we mean by direct proportion? Right? Remember, before we talked about fixed costs are fixed. But variable costs, we are learning that they change in direct proportion to the volume of goods and services that a business produces. Now let's read this as well. It says that variable costs are linear and the variable cost per unit is constant, right? And due to this variable cost per unit being constant, that is why it involves a direct proportion, in terms of the change. Let me explain. If the variable cost per marker, right, per unit, so if the variable cost per one marker was 50 pesos, it would mean that the total variable cost of producing 2 markers would be 1 Ghana cedis, right? So if one marker, it has a variable cost of what, 50 pesos, then 2 markers will be what, 1 cedi. Whereas like the increase in the number of markers, so you see it's proportional, right? As you increase the number of markers per unit, yes, so every unit of marker that you add will result in what? A variable cost of 50 pesos being incurred. So if we add 5 markers, our total variable cost would be 5 times 50 pesos, right? And that will give us just this 50 pesos. So that's what we mean by the variable costs are linear and the variable cost per unit is a constant. So you would realize that, see, it's linear, right? It's unitary. As you increase the units of output produced, the variable cost per unit, keeps rising, right? And it is constant. So if the variable cost per unit of one marker was 10 Ghana cedis, it means that every marker that you add will also result in an additional variable cost of what? 10 cedis, right? Exactly. Let's talk about semi-variable costs now. Now, semi-variable costs are also called fixed. They're also called semi-fixed or mixed costs, right? They are called mixed costs because they contain both elements of variable cost and fixed cost. So they are a combination of both costs, right? Now, due to the hybrid nature of semi-variable cost or semi-fixed cost or mixed cost, they are partially affected by the level of activity, right? So this is a graph of what the semi-variable cost will look like. I should realize that at this point, this is the fixed element, right? It doesn't change, it's constant. But partially, part of it is also variable, right? So it moves upward like this. So within this range, we have the variable element, right? So now let's imagine that as a manager of a firm, you have to identify the portions of a semi-variable cost that were fixed and the portion that was what? Variable. How would you go about it, right? That's where the high-low method comes in. We are going to look at that next. Yeah, so the high-low method, right? Let's see how it works. Now, you'll be given a typical question and you would need to use the high-low method to determine cost elements such as the variable cost, the fixed cost, or you might be given an output for you to figure out what the variable cost of that output will be. Right? So we're gonna go through this and want to solve a question. So when using the high-low method, this is how it works, right? You identify the highest and lowest cost in their corresponding output, right? These questions usually come in that nature. So you are giving figures, outputs, and then their corresponding cost, right? The total cost of the various outputs produced, and you would be required to use the high-low method to determine what the variable cost per unit is, right? And to do that, we use the high-low method, and it's because of this first step one. That's why it's called a high-low method. So you take the highest and lowest cost in their corresponding output. That's the first step, and then you find the variable cost per unit using those figures. Right, now the formula for finding the variable cost per unit is given as what? The change in cost all over the change in output, right? And the change in cost is given as the highest cost minus the lowest cost, and so too for the output is the highest output minus the lowest output, right? Bear in mind that the output is always measured in the cost unit, so it depends on the question, but usually you see units there. And the currency, whether it's Ghana cedis, dollar, whatever it is. So make sure you represent that in your calculation. Now, after you have found for the variable cost, per unit, you need this formula to find for the total variable cost, or sometimes even the total fixed cost. Depends on the nature of the question. Right, so you also have to keep this formula memorized in your head, because it's a very, very easy formula. Total cost is equal to total fixed cost plus total variable cost, right? Sometimes you'll be required to manipulate this formula or this equation to get your answer, so it's important that you have it in your mind. Now, total variable cost is given as the total variable cost per unit times the output. So, as you can see on the screen, let's have a look at that question and then we want to solve it, right? So, it's about the total cost for product A for 100 and 200 units are given below. Right, so you have a product A, and then for 100 and 200 units are given below. So the 100 units, the total cost was 700 Ghana cedis, and then the 200 units, the total cost was given as 900 Ghana cedis, right? So obviously from this you know that 900 Ghana cedis is our highest total cost, and the 700 cedis is the lowest total cost, right? So too the 200 units, it would be the highest output, and the 100 units would be the lowest output. This is a simple question where you only have your total, you have two values, right? You get that there's two costs and then there's 2 units. Sometimes they may be multiple, and you'll be required to fish out the highest and the lowest, and those ones can be quite tricky if you don't look at the figures well enough. Right, so in this question we are required to compute the total cost of producing 180 units, right? This is not your typical question. This time around they're trying to go the extra mile and predict the cost for 180 units of output produced using this data. So let's use the high-low method to do that. Yeah, so we've identified our highest cost and output, and also our lowest cost and output, right? So what's the next step? The next step is to find the total variable cost per unit, right? And as we said, so this step 2, the total variable cost per unit will be given as change in cost all over change towards output. Now change in cost will be computed as what? The highest minus the lowest. That was 900 minus the 700 cost, right? Like for the output, it will be 200 minus 100, right? This gives us 200, and this gives us 100. Computing that, it gives us 200 over 100. It gives us We have a variable cost now. Where do we go next? The question asks us to find for the total cost of producing 180 units, right? So let's do that. From here, we have to find for the total fixed cost and also for the total variable cost, right? What we really need is the total fixed cost, because without the total fixed cost, we can't solve for the question, right? So the total fixed cost runs through out, right? So first, we start with the total variable cost, and total variable cost is giving us the variable cost per unit times output, right? When calculating for the total variable cost, make sure you use the output and the highest output. Don't use the lowest one, use the highest one. So this will be 2 times 200. So the total variable cost will be 400. Right. Now this is where this formula comes to play again. Right? See. Hope you remember this, right? Now the total cost, again, use the highest one. To this 900, right? It's corresponding 200 to 900. So always use the highest one. So for this total cost, it was 900, right? Sorry. So we make total fixed cost established and then we solve for it. So always choose the part of this resistance. So avoid negative. This is the same as, right? So never forget the units. That's crucial. Now we have the total fixed cost now, so we can now solve for the question, right? So all of this was just required things we have to get through to solve the question. Now the question is telling us that if you were to produce output of 180 units, let's say Q is output, right? 180. What will be our total cost, right? So we're looking for TC. We don't have that. Total variable cost will be different. But we have the total fixed cost. That is constant. So how do we proceed? Now, this is what I'm looking for, but we have to find participants. Thankfully, we know that the formula for total variable cost is what? The variable cost per unit times output. The output is referring to the 180. The variable cost per unit was already calculated. This is where you had it. So this 2 is coming from here. Right? This becomes 360. So now we have our variable cost, our total variable cost. So now our total fixed cost plus our total variable cost will give us our total cost. Right? So total cost is what? Total fixed cost plus total variable cost. Already calculated all that, so just put it into the equation, then you get 860 Ghana cedis as a final answer. Meaning that what? 860 Ghana cedis will be the total cost for producing 180 units of output. That's it for this chapter. Thank you very much for watching. There will be another tutorials on trial questions or several questions like this. So make sure you watch that as well. I'll see you in the next chapter. Thank you very much for watching.